Oh my God, I'm gonna lose all my money. What's gonna happen? You gotta stop panicking every time the stock market goes down. It's going to go down. You're in it for the long haul, at least you should be. You're not in it to make a quick buck. You're in it to set yourself up with compounding interest and building it up so that you can retire comfortably. If that interests you, stick around. If you came across this video, you probably are panicking right now. There's a war going on, possibly even worse. Gas prices are rising, COVID, a lot more things are happening. But I'm here to reassure you that you have to take emotion out of it. You need to keep calm and don't panic sell. That's what gets people into trouble, is thinking with their emotions. You have to stop looking at your account every 5 seconds and wondering what is going on, when is it going to stop going down? Because yes, the stock market might go down in a 6-month period or even a year period or so. But ultimately, the stock market goes up and has done so for 100 years or so. So you need to stop. It's going to be a roller coaster ride. You got to stop panicking. I'm going to show you some historical data. Hopefully this gives you some peace of mind. Through the stock market history, there's been 48 recessions, times that the stock market dipped a significant amount, 48 times. And each time it has recovered and gone up even more. In 1987, the Dow Jones Industrial Average plunged by nearly 22%. 22% in one day. Black Monday, as the day is now known, marks the biggest single-day decline in stock market history. Imagine losing 22% in one day. People panicked. From its local peak of about $1,300 on August 28th, the S&P 500 fell 48% in a little under 6 months. It has always recovered. It has always gone back up. That's what you have to take into consideration. You have to look at the history of the stock market. Take a step back and realize that you're just a tiny dot in history. And if you think about it, every single time that the market has had a recession or a bear market, it has gone up. That should reassure you. And for those who are visual learners, here's a graph showing all the way from 1930 till current day. Notice that there are plenty of ups and downs along the way. So sometimes if you sold when it goes all the way down, you lose out on a lot of money. And you can't time that. You can't just say, oh, I'm going to sell and I'm going to wait for things to go down and then I'm going to buy again. Most of the time, people fail to time the market exactly. It's nearly impossible. No one knows when it's going to go up or down. However, if you look at the historical data as we see here, you'll see that the market has always gone up eventually. That's why it's important to stay in the market. Trust me, you want to leave your money in the market and invest it. You don't want to take it out. You want to avoid incurring fees or taxes. So I'm going to share a story about my friend who invested a ton of money in the stock market, right? And then COVID comes along and the stock market starts going down and down and down. And he panicked and he took all of his money out. He sold, he incurred taxes and fees, and he took it out and he decided, I'm going to wait and see what happens. I want to see it's going to go lower. Everything's going bad. And he waited and he waited and he waited. And he wound up not knowing when to get back into the market. And he missed out on a lot of percentage. And not only that, on dividends, capital growth. So trust me, it is better to leave it in the market. I want to take a look at an Investopedia article I found online. Some of the key points are, while holding or moving to cash might feel good mentally and help avoid short-term stock market volatility, it is unlikely to be wise over the long term. So basically what they're saying is it might make you feel better emotionally and kind of wait it out. But again, we go back to the example of my friend, and he was trying to wait it out too, and it wound up working against him. And the next point is, once you cash out a stock that's dropped in price, you move from a paper loss to an actual loss. What they're talking about here with the paper loss is that it's not actual loss until you sell. So if you're down in a stock and you don't sell, nothing happens. You didn't lose any money. You're just waiting for it to go back up, which it ultimately usually does, especially when you invest in a diversified index fund. Cash doesn't grow in value. In fact, inflation erodes its purchasing power over time, meaning that if you just hold cash under your mattress, it's not going to do anything. It's actually going to lose value. So it's better to keep it in the market. And cashing out after the market tanks means that you bought high and they're selling low. That's the worst investment strategy to do. So this point is very important. Never invest money that you can't afford to lose. I want to say that again. Never invest money that you can't afford to lose. This is super important because if you're barely scraping by and you're really, really tight on money and you invest your last couple of dollars, you're going to be tempted and emotional to take it out. You're going to be watching it nonstop and you're going to panic when everyone else panics and take it out. So put in money that you can afford to invest. And remember, the stock market is a risk, although it does eventually go back up. At least that has been the case for the last 100 years. Warren Buffett, one of the greatest investors of all times, said, be fearful when others are greedy and be greedy when others are fearful. Meaning that while others are being greedy and the stock market's going up and they think that it's going to keep going up, you should be a little bit nervous. But when it goes down and people are scared and getting out of the market and it keeps going down, be greedy. Buy it up. It's on sale, especially if it's a solid stock or index fund. Remember, you should always have a plan and a goal when investing. Don't panic. Keep to your plan. Stay the course, and you'll do well. I hope this has given you some peace of mind. Please remember to subscribe and hit that like button.